to double check and confirm, but yeah, we made it. We made it. So yeah, that's great. That's great. Let's
Oh,
get started with a new episode of 21 on, where we, in 21 minutes, dive into some of the, most pressing topics of the past couple of weeks. Usually we've been structuring these as debates, but we're going a bit more conversational style today. Just to briefly introduce, my name is Tycho. I run Bitcoin strategy at Treasury, which is an emerging Bitcoin treasury company for the Eurozone, based in the Netherlands. And yeah, I'm here with a very very esteemed guest, Johan, who is building the digital credit frontier and the Bitcoin layer. But maybe you just want to briefly introduce what you guys do, and then we can take it from there.
yeah, sure. So thanks for having me. I'm head of Bitcoin research at the Bitcoin Layer. The Bitcoin Layer is founded by Nick Bhatia. He wrote a couple of books about Bitcoin, and we're a research firm based in the US. And next to that, I'm the host of the Digital Credit Frontier. It's a podcast about digital credit, about treasury companies, and that's so I'm speaking on my own behalf, not on behalf of the Bitcoin Layer. But yeah, this is a topic where I'm have a personal interest in. So yeah.
Yeah, absolutely, and same here, and I think same many people with us. So, but yeah, I mean, there've been some interesting announcements this week, right? I think for one, Strive's announcement. I think it was a couple of hours ago.
Yes.
SATA, their preferred instrument, is starting to pay daily cash dividends
Yes.
starting mid June, June 16th, at 13%, 1.3 annualized APY. And yeah, that's a first for any US security. I think Saylor was saying for the longest time, right? STRC can't pay daily cash dividends, and the guys at Strive have now figured it out. So yeah, I mean, we were just talking about this before going live, but what do you think, and how do you think this changes things?
So I think this a great step. I think that first and foremost, this is like they're bringing innovation to the whole sector. I think that's like probably the most important thing because um, they'll open the eyes of the other companies. Every like what strategy did is trying to come up with new instruments, better instruments that fit their goals better, but also doing things on their like their own way. They're communicating more with retail, with their shareholders. They're building real-time dashboards. So all these things, I think, will lift up the entire like transparency in the sector, in the financial sector. And I think this is a big step. Stretch. So strategy was with they were planning to go from monthly payments to bi-monthly, so two times a month. That the shareholders are still voting for this, and while this is happening, Strive comes out with daily dividend. So and that's the first, and that's I think a great step. And I think also the main reason why this is important is with Stretch, the market is experiencing these peaks in volume. So the days before the ex-dividend date, there's a peak in volume because people buy the security to get the dividend payment, and then a couple of days or a couple of weeks, not much is happening. And what strategy was aiming for is more of a like a more
Like
of
a more
a
smoother. I mean, it's pretty crazy to see, right? I mean,
yeah.
especially now, like you sort of see all the volatility, right? There is the dividend date. It obviously immediately kind of comes down, right? There are people who are kind of arbitraging it, right? So they're buying it
Yeah.
now, they pocket the dividend, they sell afterwards. And yeah, that's probably like a very important thing to get out of the way to get rid of the cyclicality, right? But
Yeah.
I'm curious if you like, have you looked into this, like how? So this is very soon, right? That Stripe is going to start doing this
Yeah.
essentially a month from now. Um, yeah, any idea what it would take for Strategy to follow suit? Any initial thoughts on that?
So I'm not sure. I think they need to vote again if they want
Yeah.
to. But the whole thing, Michael Saylor said, because they looked into also weekly dividend payments. I think their initial thought was like even more frequent payments than 2 times a month. But they said like Nasdaq required to the company to to tell all the shareholders that
Yeah.
10 days upfront what the dividend payment will be. So that's why they choose for 2 weeks, 14 days and 10 business days. That was the least amount they thought they could do. But what Strive did is they are so announcing the dividend payments like 45 days ahead. So for the next month, next 30 days, or next 20 business days, these will be the payouts. And that's this way they're still
Yeah, they're still
so
falling within the rules, right?
yes, it's within the rules, it's within the requirements of the Nasdaq, but still are able to pay out on like every business day. So I think this is a great or loophole, or just a clever way to do it.
Yeah, it's all this kind of this kind of like legalistic arbitrage, right? I mean, it's building within the constraints of traditional finance, but no, super interesting. So I think that's going to be very exciting for the space, right? Like these daily dividends, when they really take hold among preferreds, like wherever they're issued, will be great. It will get rid of the arbitrage, get rid of the cyclicality, right, around a lot of the buying. And yeah, no, really great stuff. And also, I mean, the Strategy earnings call was not very long ago.
Yep.
And you had some interesting takeaways from that. Specifically around like how MSTR is like positioned more as the central asset that Strategy bases their decisions on. But yeah, let's maybe do some quick thoughts on that one as well.
Yeah, so my biggest takeaway from the earnings call was that they're really focusing on the MSTR, the common stock share performance, and I think the pivot, quote unquote, that they made was like what last year they weren't sure about selling Bitcoin, and people were telling, yeah, but if the MNAV is below 1, it's accretive to sell Bitcoin and to buy back shares. And they never went with that thought because their goal was, we're buying Bitcoin, we're not selling Bitcoin. But now it really looks like they changed their thoughts around what is accretive and what's not. And everything that's accretive for the common stock shareholder, we're gonna like at least think about it, and we're open for any kind of trade. So they come up with a lot of slides about which trade is possible at which MNAV. And so they're saying like if the MNAV, and they're talking about enterprise NAV, if that's below 1 or even below 1.22, it's accretive to sell Bitcoin and to buy the common stock. But also they were talking about the convertible debt. So there's some convertible debt. I think that 2029 is as a strike price of $600. And it's out of the money right now. So it's trading at a discount. And they're also playing with the thought that if they could issue Stretch to buy back the convertible debt, and that way, prevent those debt converting into common stock.
into share. Yeah. Because I mean, this is something I've been talking about for a long time, right? I mean, it's the broader theme of getting rid of the convertibles and sort of replacing it with preferred equity as the main vehicle to raise capital, and the main vehicle to buy Bitcoin with. I mean, it's going very well on the issuance, right? I think it's like I think 83% of all of April's capital raise was STRC funded. So we're in an STRC market. It's very clear. but this is not just about letting the converts expire, but potentially using the STRC issuance to buy them back. That's
Correct.
sort of what they were saying?
Yeah. Correct.
That's very interesting. I mean, would mean that maybe Bitcoin moves a bit slower because there's just not so much buying. I mean, I think even today, right? I mean, today on Thursday, right? It's Thursday, 14th of May, and STRC is trading at par, so they're buying a lot of Bitcoin. I think it's thousands a day right now, and so that would then slow a little bit. So this is like, and they also said they would obviously sell Bitcoin potentially, right, to cover for dividend payments and so on. So this announcement is a bit more, or this earnings call was a bit more bullish MSTR, but like I guess for Bitcoin, it maybe creates a few more questions. Is that a fair way to say it, or do you have another take?
I think they also really every time in every slide the credit rating was also within their decision making. Like they had like two views, like this will be the impact on the asset side, and this will be the impact like on the common stock, but this will be the impact on like their credit rating, because they also talked about using the USD reserve to buy MSTR back. So, and they were saying like that would be like bullish for MSTR, but it would hurt the credit rating. And there were also questions, because I saw Lynn Alden asking this question on Twitter earlier. Like they said last year they're aiming for 24 months of USD reserve. So
yeah,
they want
or even 36, I think, right? Like 24 to 36 months.
Yeah, like something in that range. And because they issued more stretch, it's now at like the dollar value amount stayed the same, like 2.2 billion. But the months is now 18 instead of 24, and it's declining.
I see them just opening it alongside as well, and it's declining quickly.
Yeah, it's declining quickly with the more stretch they're issuing. So, and Phong Le answered this question. He said they are letting the market decide, because when the USD reserve or the
letting the market decide what exactly?
The market should decide how large the USD reserve should be, because he said if we're doing nothing, the months to cover will decline, so the credit rating will get worse, and eventually people stop buying stretch because the credit rating gets worse, and that's for them a sign. All right, we need to increase the USD reserve again. So it's one big game of letting the market decide like what is the reasonable amount.
Yeah. I see. That's very interesting, because I think one of the theses I had was that this USD reserve was mainly there to get a rating for STRC, right? Like to have a certain USD reserve, because I think the first S&P rating for Strategy as a company, right? It didn't count for Bitcoin as capital. Yeah, so my thinking was, okay, this USD reserve exists primarily to, prove to the ratings agencies that Strategy has capital, is able to pay for things. But yeah, if they're spending it so quickly, maybe they've heard from the regulator actually, or from the ratings agency rather, that this is maybe not the thing that matters most, and instead, the thing that matters is other things, right? So
I think you're addressing a good point, because some people are also like saying that the reason that Strategy is open to sell Bitcoin is for a better credit rating, to show the rating agencies like this is real capital, like we can sell it anytime for like without slippage, and like we can really use this capital to pay dividends. So that could be also like
no, I absolutely think so. And I also think that when it comes to like Strategy selling Bitcoin, I think there are a lot of stakeholders in Strategy, right? There's obviously people like us, right? Like we Bitcoin enthusiasts, we like Strategy, but they also have a very big, audience in traditional finance, or, like the Sovereign Wealth Fund of Norway, or all these, huge funds buying MSTR. I mean, I think, people essentially hedge Bitcoin or crypto exposure in size using MSTR. So there's a lot of people with assumptions about, oh, what will Strategy do when they sell some Bitcoin? And I think we know, right, that the market probably won't really care, or at least Bitcoiners won't really care. But I think that maybe some of these, say the Norwegian Sovereign Wealth Fund is maybe worried, oh, if they sell a bit of Bitcoin, maybe they're going to lose all of their supporters. And I think at some point they just have to prove that. They just have to go out into the market and say, yes, we sold some Bitcoin. And, Jan will still be here. I'm still going to be here. Everyone is still going to be here. Everyone is still going to be supportive. And I think that's probably the thing that will just create more confidence in Strategy or MSTR as an asset, right?
Yeah, for sure. So, Tycho, I also had a question for you, because Jeff Park, he came with a question about how sensitive is their policy to changing in the interest rate that the Federal Reserve sets. Because I think, it's interesting to think about that. The lower the interest rate, the more money may flow to Stretch. But then, should they lower their rate or should they issue more? I would like to hear your thoughts about that.
Yeah, I think it is an interesting question, right? That Jeff asked. And yeah, when it comes to the interest rate or the rate, right, that's Stretch pays, and whether or not it is really dependent on something like the Federal Reserve rate, I think, well, obviously it's an input. Right? I mean, one of the theses, that we have at Treasury is that a European Bitcoin treasury company will be able to issue preferreds at a lower rate, because ECB deposit rate is structurally lower, and there are structural drivers to keep that low. It's been lower than the US for 15 years, and will probably stay like that, because that's the only way that the euro can survive. I mean, we see similar things in Japan, right, where the deposit rate is of course less than 1%, and then Metaplanet is kind of taking that and building a preferred strategy on top of that themselves. So it's definitely an input, and an important input, but just one of the inputs, right? So I think STRC, like when they come up with the interest rate for it, they obviously take the federal funds rate, right, and they say, okay, like 500 basis points above that, 600, 700, 800, and then you kind of have what the Stretch rate is today. And that's obviously largely made up of that portion that's like, okay, Treasury yield plus, right? The portion that is plus the 800, that's the larger portion of the rate. And I think, how does that 800 come down? I think that's going to be the real question. That 800 basis points, or like 8%, right, in normal people's words, that 8% is going, that premium essentially, that STRC pays is going to come down, I think, just when Bitcoin gets more adopted as an asset, right? When we get things like the Clarity Act passed, when we get more Bitcoin on the balance sheet of more companies, when the asset itself grows, and we get the institutional adoption for it. So I think that's probably going to be the bigger lever, and then the Federal Reserve cutting like 0.5% or so.
Yeah, makes sense. I think I'm very interested in to see what happens when interest rates in the US really go down, because we, like, last year, like, since these instruments exist, we have like a stable interest rate of maybe we had some cuts in November, I think, but mostly it has been around like 5 or 4%. But what will happen when they lower to 2% or 1%? And what happens if Strategy like remains the 11.5%? Like, when the spread is not 800 basis points, but like 1,000 basis points, like how much demand will go to?
Then it will probably come down. Then it will probably come down.
Yeah.
I think if we look back at the zero interest rate times, right, then these kind of instruments, right, like junk bonds, I mean, that's like the actual name for these kind of high yield credit instruments. Like, I don't think they were trading at 8% plus the federal, like plus the Fed rate, right? It was a bit less than that, because like as there are few opportunities, the rates also compress, but it was probably like, it was definitely still above 5, right? And it will also be interesting to see what happens with Bitcoin. But I think before interest rates come down, we still have a bigger fish to fry, which is the whole Iran question, right? And
Yeah, for sure.
I guess they're solving that right now, or trying to solve that in China. So
Yeah.
but yeah, we're almost coming up on the 21 minutes. You know,
Mm.
we keep these one at 21. Yeah, maybe a couple of final thoughts, like something you're excited about in the next month, next weeks, and yeah, in the Bitcoin treasury space.
So yeah, I'm just mostly focused on the derivatives positioning by investors. That's something I've been tracking a lot because, like in August 25, there was like a big divergence going on between Deribit investors and IBIT investors, and like the Deribit investors, the crypto native investors, were positioned better, and like how they're now positioned is still for June some bearishness, and after June, like September, December, it's getting more bullish. So that's something I'm watching.
The key thing to watch. So
yeah, and for the treasury space, so I'm really looking forward to see what's happening with SEDA versus Stretch with this new daily dividend payment. So that would be very interesting.
No, awesome. A new dawn for digital credit, and yeah, exciting things coming up for the space. But yeah, those are 21 minutes. I mean, I guess thanks for joining. Thanks everyone for tuning in, and gonna be back in 2 weeks with another 21 on, and then next week King, CEO of Treasury, is going to be back with a Treasury forum at the same time. So see you then. But yeah, it was really good to have you.
All right, bye bye.